Greetings guys, Joseph James here once again with your nightly newsletter brought to you by theschooloftrade.com. Today was September 24th, 2009, Thursday here in the live trader. And before we talk about the trades we took today, I want to remind you guys about our free resource online. Guys, head to our YouTube page, /School of Trade. And when you're there, take a moment to subscribe to our page and then rate and comment on this video. That way you get all the updates whenever they come. Let's talk about the trade room totals today. We brought in 170 bucks in the room this morning. Could have done a little bit better, took a loss in the Russell that gave back a little bit of those profits that we had earned early in the morning, the DAX and on the Crude. We'll show you guys, of course, what it looks like though. But as usual, having nothing but winning days here in the market, consistently profitable here in the room, trading small size, so of course you can easily dial this thing up a bit for yourselves. 690 this week, 170 we brought in. That brings our monthly total here just above 2,600 bucks here in the month of September. We'll keep you guys posted as we work our way through the month. Let's talk about our term of the day here. Term of the day is stop placement. Now, stop placement is a term that I think most people probably know, but they may not be familiar with. And what that means is this, of course, is where your initial stop is placed to protect your position. So the stop placement, this is a pretty important thing. And the small details, right, between a 6-tick stop or an 8-tick stop or a 20-tick stop, well, those small details, they have the big results. So we got to make sure that our stop placement is correct. Now, at the School of Trade, in our live trade room, we show you guys how we use very tight stops. We believe in very tight stops, especially while you're learning. Because a new trader is expected to make mistakes, those mistakes are compounded by wider stops. So we use tight stops to really emphasize the need for precise, correct entries. So tight stops, we can place them based upon the max risk per trade. So based upon what your personality is, how much money you've got to risk in each trade. We can also place them at the extreme or the opposite of a previous candlestick. So we use swing highs and swing lows. Now, a stop placement, right, this should be mechanical or automatically. In other words, I should not have to think every morning of where my stop's going to be and how to place it. It needs to be automatic. Now, the stop, again, it can be market specific, which means that a DAX stop will be different than an S&P stop. So we may have, of course, we'll have stops will be different for each market. So they're market specific, and they may change with individual markets as the market conditions increase or decrease. So as we see more volatility, we will of course adjust our stops accordingly. But they will always be mechanical every single day we take our trades. Now these stops may also be trader specific, right? If you have a small account and a low tolerance for risk on each trade, we've got to tailor your stops accordingly. If you're trying to protect profits that day, maybe you're having a big winning day, big winning week, big winning month, and you want to dial down your stops a little bit, tighten them up to protect your profit. That's another great way. It's trader specific. Now you may also, of course, because of a specific situation, want to limit risk based upon whether it be news events. Again, maybe you've dug yourself into a hole and you want to limit the additional digging, right? That would be another reason there for trader specific stop placement. Now guys, we're going to show you guys how we place our stops tomorrow morning in our live trade room. Now on Mondays, we open up a little bit late at 7:30 a.m. Eastern Time. But Tuesday through Friday, European session opens up at 2:45. The U.S. session opens up at 7:45. And of course, don't forget guys, Tuesdays and Thursdays, free webinars at 11:30 a.m. Eastern Time. And if you're going to come out and join us tomorrow morning in our live trade room, the beginner's course is what you want to pick up. Let's take a look at the trades we took today. Now our first trade this morning, just after the open, this morning was actually decent volume at the open, if you guys recall this morning, right? Pretty good volume this morning at the open. 3:14 here, guys, just after 3 o'clock, so just about 15 minutes after the open, the DAX began to sell off here. We looked for, because the DAX was trading at its lows, we couldn't sell the lows. Remember that, guys? This morning we saw pretty much everything kind of grinding down on those lows. And as you guys know, I'm not going to sell into support. So I have to wait for price to either pull back, right, retrace off those lows to take an entry on a retracement, or I've got to look for a counter trend trade. And that's exactly what we looked for here on our first trade of the day. 314, a 2-step long going against this short-term trend. It popped above that green line there. That green line was that most recent swing high, the little pop. Once we got above that trigger line there, that yellow line, it flattened out right there above that green line. Once we got above there, entry here was 56.36. We took our first target at 4 ticks before this counter trend trade reversed against us and filled our stop, which would be moved up to our point of entry to eliminate risk. So we took our first target, moved our stop up to entry to eliminate risk and guarantee that this winning trade did not become a loser, because as you can see, it quickly reversed right in our face, came crashing back to the downside, and then went sideways here for about the rest of the morning until the U.S. session opened. Right, that put 8 ticks, that's 4 DAX points, 35 bucks a point, 140 bucks USD in our pocket on the first trade. So a very small trade with some big, powerful results. The next trade here was on gold. This, of course, we had to wait for the U.S. session to come. Only took one trade this morning in the European session. The second trade of the day, which was the first of our U.S. session, was taken in the gold here, 947. Now, again, another example here, how we were watching this thing kind of rattle down, selling off, chopping its way down. We looked for a number of trend continuation patterns on the way down here, what we call breaker patterns, in this case, to the short side. We saw some that, of course, opened within 15 minutes of 9:30. We saw a couple, of course, that happened high risk because momentum was against us. So we began looking for these patterns, but nothing really lined up until, of course, 947 on the gold here. This is a two-step long, again, counter trend, right, going up against the short-term trend. 1013.2 was the entry here. We took our first target of 3 ticks, a little bit tighter this time, right, 3 ticks. Of course, that puts 6 ticks total in our pocket for a total of 60 bucks. 10 bucks a tick, 60 bucks there on the gold. Now, we weren't done there yet, right? Weren't done there yet. Next up was the Russell. Now, on the Russell here, gave a little bit of that money back. In fact, gave almost all of it back. We were up about 200 bucks here at this time at 1021 here in the Russell. Now, of course, once again, the Russell was selling off here at its lows. And as you guys know, I can't sell into that support. So as you guys can see here, as we rattled on down here on its lows, we had a decent level of support in that pink trend line there. Of course, it bounced up off its lows, and looking for this two-step long here, got stopped out. This two-step long entry here at 6018, 6017, can't remember what exactly the fill was there on this one. The slide doesn't show it. But basically got stopped out here, 6-tick stop, and of course that takes 180 bucks out of my pocket there for that full stop. Usually we're going to get out of this thing a little bit earlier. This time, no, we didn't get any signals to get out early. Just kind of went right towards our stop and took our head off on this one. So we gave back a little bit of money. The reason why we took this stop, though, that was the big picture. The big reason I was happy about this, though, is that I was able to show you guys in the room this morning live just how important it is to always be focusing on your medium time frames. I missed this one. We had a medium time frame was at 602.3, and that's exactly what the price went up and tested. So we getting in here at 602, 602.1, we didn't have much information ahead of time. I took my eye off the ball, and of course, you can see it resulted in a stop. So, of course, guys, learn from my example here. Don't take your eye off that medium time frame. It's a dynamic indicator. It's always changing, and it will trade right down into your potential entry and stop you out just like this. All right, next up, guys, this is on the crude. Now, the label on this is wrong. This is not the gold. This is the crude. This, of course, a wonderful example of just how powerful this two-step really is. Now, a two-step pattern is a counter-trend pattern. You'll notice price was increasing here as it broke above that 66 even level here on the crude market. We saw 1, 2, 3, right, a triple top there, a nice head and shoulders pattern. That was very strong market sentiment. Then when we took this break below this green line here, that was where that swing low was. This, of course, 40 minutes past the hour of 10 o'clock, 1040 on a two-step here. Fill was at 66.18. We took 3, 8, and 1. Total them up there, 15 ticks. That puts 150 bucks back in your pocket, and that shows you guys, add them all up, how we got to our 170 today in the room. So here on the crude, a great example, guys, how we trade all the way through the day. Yeah, we're going to take stops every once in a while, but the key is to remain focused, get back in the market, look for the highest probability trades, and take them when our rules line up properly. We looked for it, our rules said go, and we took the trade. Now, one more slide here. As always, guys, the pace of the tape indicator continues to be a valuable part of our trading every single day. Here on the DAX, a breaker short here was setting up just after 3 o'clock. After we looked for that two-step long, or I'm sorry, just before that two-step long, we looked for this breaker short. Once again, you guys can see in the lower left-hand corner, decreasing pace of the tape. Once again, easy to spot patterns on this proprietary indicator, the pace of the tape, and I could easily avoid that losing trade. Right? Our rules tell us exactly when to get in, but most importantly, when to do nothing at all. And guys, half the battle is keeping the money that we work so hard to make throughout the day. Great example there of how we use our pace of the tape indicator. Want to remind you guys, tomorrow we open up at 2:45 a.m. Eastern Standard Time. We do free webinars on Tuesdays and Thursdays, so make sure you guys come on and join us for that. We'll give you live calls, plenty of time as part of our free 3-week trial. The beginner's course is recommended for all free trial members. And guys, please remember to rate and comment on this video. If you want more information about lifetime membership, drop us an email, sales@schooloftrade.com. My name is Joseph James. Thanks for joining me tonight. We'll see you guys tomorrow morning, live in the trade room, 2:45. Bye-bye for now.